Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring, and today is Sunday, June 26, 2022. Hope you're having a good weekend. Hope you had a good trading week last week, and welcome to the weekend edition of the Gossett Trading and Mentoring podcast. So this is the format, and this is what we're going to do today. First of all, we are going to run the U.S. legal disclaimer as usual. Secondly, we are going to come back. We're going to take a look at my current positions that I still have open, and we're going to talk about when I bought them, why I bought them, and how I am going to manage those positions moving forward. I like to trade on multiple time frames. I think it improves your trading. I think there's a lot of benefits to it. So I day trade all day long on the 5-minute bars. I trade the daily bars for swings. I trade weekly bars for swings, and I trade monthly bars for swings as well. I think by having a variety of time frames, it helps even out your equity curve. And if on a smaller time frame it takes you out and then reverses, then that's how it goes. But maybe on your weeklies or your monthly trades, you're still in there, of course, because your stops are going to be wider and looser, just due to the fact that the ranges, average true ranges on the weeklies and the dailies or weeklies and the monthlies are going to be different than the dailies. But sometimes they all work out. I actually have 3 positions. We're going to highlight Pfizer on the daily, BABA on the weekly, and Home Depot on the monthly. All right, so when we're done with that, we are going to talk a little bit about trader psychology. Always the most important part of trading, no doubt about it, everyone. Trading psychology, your mindset, and how you manage your positions really is the difference between whether or not you're going to be a profitable trader or, unfortunately, an unprofitable trader. All right, so I like to talk about trader psychology. I like to also cover one of Frank's poems. He's a friend of mine, trading friend of mine, and he's a wonderful poet, and we'll just take a few minutes and take a look at one of his recent trading poems. There's a lot of wisdom in those poems as well. After that, I have gone down through my watch list. I have gone through and marked some potential new trades for me for next week. As usual, when I do this podcast, I do have to usually have the stocks that I take a look at and mark for next week. They either have to go lower, find some support at a lower level, or they have to go up, maybe get a little momentum to the upside. But generally, the symbols that I do flag to go over here for me, right? So I mean, this is essentially for me for next week what I'm looking for. Usually they have to go higher or lower. So we'll go through those. We'll take a look at the indexes, the S&P and the NASDAQ as well, just to try to get an idea of what's going on there. We had a nice little rally finally last week, and I hope you were involved in that with your positions. And I hope your positions are going well, and I hope you're trading well, and I hope you got your mind right, and that you're following your process. That's what is important. All right, so that's the plan. Take a look at current positions, talk about a little trader psychology, take a look at one of Frank's poems, and then go through the symbols that I've marked for some potential new trade setups for me for next week. All right, so that's the plan. First of all, let's run that U.S. legal disclaimer. I'll be back in 40 seconds, and hang tight. Be right back. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, thanks for holding through that with me. Let's take a look. Only have 3 positions here, swing trade positions, but first of all is Pfizer. So I did buy Pfizer back here on the 17th of June. Was a nice confluence of signals We had two of them. Orange line here is the 300-day moving average. On that same day, we went under 30, over 30. So we went under 30 during the day, closed back over. That's a legitimate signal by itself. But of course, I like to have confluences of signals. I like to have more than one signal that lines up to justify the position. And we also had an intraday rejection of the 300-day moving average. So I bought that at 46.56. Of course, I placed my emergency stop 2 ATRs below. Just real quick, I like to cover this each time because it really is a super important way to start the trade. But yeah, okay, you know why I bought that. You know why I bought this, right? Under 30, over 30 intraday, one signal. Intraday rejection, the 300-day moving average, second signal. But I still have to know how many shares to buy, where to place my emergency stop, where to place my end of day stop. So let's cover that quickly. A good rule of thumb is whatever your trading capital is. Let's just use a hypothetical $100,000 account. $100,000 account, 1% of that is $1,000. If you have a $50,000 account, 1% of that is $500. If you have a $25,000 account, 1% of that is $250, right? So I have to know what my maximum allowed loss is on any one trade. So let's use the hypothetical $100,000. $100,000 times 1% is $1,000. $1,000 divided by the value of whatever the 2 ATR is at the time when you bought the position. So it's going to change every day. Let's go back to the day that I actually bought it. At the time, the average true range was 286. So $100,000 hypothetical account, 1%, $1,000 divided by the value of the 2 ATR, 2.86. And that shows you how many shares to buy, 349.65. So I'd round that to 350. Okay. If you're trading a $50,000 account, it would be half of that, right? So it would be 175. So that is how I know how many shares to buy. Then I have to place my emergency stop. Well, I just use the 2 ATR, the value of the 2 ATR, 286. I use that to figure out how many shares to buy, but I also use it again to show me how far below my entry point is my maximum allowed loss. Well, it's exactly $2.86 below. And if it went there, how much would I lose? Well, I'd lose the $1,000, right? Because you take the 349 times $2.86 below your entry, which is the maximum allowed loss, you would lose your $1,000 or your $500 or your $250. So it's really, really important. Now, once that's my emergency stop, my end of day stop, which I'm going to hit about 95% of the time, I'm only going to hit this emergency stop about 5% of the time, but my end of day stop was a close below the 300-day moving average, right? I bought it right above, so even if it closed below just a little, I would get out. Now, I have one more line up here, the orange line. This is a trailing stop level. This is exactly the value of 1.5 ATRs above my entry. So as soon as it gets there, now I go into a different mode. I'm not going to use this maximum allowed loss here for the full position once we reach here. Well, you can see 2 days later, I mean, it moved up nicely, right? I bought it at 456, moved up the next day, got to my trailing stop level. I don't do anything there, but now if I have a close below the previous day's low, I will get out of the trade. Next day, did this close below here? No, it did not. Friday, did this close below here? No, it did not. Monday, if it closes below Friday's low, what will I do? I will sell half. All right, I'll lock in the half position. Now, I also take off 10% of whatever shares I have remaining as soon as it reaches 0.45 ATRs above the previous day's close. So right now, the previous close was 51.60. So this is what I have to do for tomorrow. 51.60 plus the value of the 0.45 ATR, which is 0.67. So first profit target for tomorrow, don't know if it's going to get there, is 52.27. Now, I'm going to take the first profit target, which is 52.27. Again, add the value of the 0.45 ATR is again plus 0.67. Second profit target is going to be 52.94. I'm going to do it one more time. So this is my second profit target. I'm going to add the 0.67 to that, 53.61. So let's put these numbers up here. Okay, so the first one was 52.27. Okay. The second one is going to be 52.94. Okay. And the third one is going to be 53.61. So those are my profit targets for Monday. Now, let's just say I have 100 shares left, right? Let's say I started out with, I don't know, 300. I scaled out on the way up here. Let's just say I have 200. Let's just say 200. Yeah. And so every time it moved, I hit one profit target here, hit one profit target there, next profit target, next profit. I have my 3 up there. I don't know if I'm going to hit 3 on Monday, but even if I hit 1, I'm going to take 10% off. So if I have 200 shares left, let's just say I have 200 shares left, 20, I put a limit order in for 20 or 10% at 52.27. I put another limit order in at 52.94 for another 20 shares or 10%, and next 53.61. So what is that? 20, 40, 60. So if I hit all of those, I'd have 200 shares starting the day. If I hit 60, I'd have 140 left. So I do the next thing the next day. I'd have 140 shares, and then I do my 3 profit targets. What's 10% of 140? 14, right? So I'd have a limit order for 14, second one, another one for 14, third one, another one for 14. All right, so I hope that makes sense. I mention this each time in the podcast, but in this podcast, I try to go over, explain what I'm doing. I don't have the time to explain step exactly by step exactly what I'm doing, and that's why I do teach private one-on-one lessons in the evening time. I'll talk about it at the end of the podcast. But if you're interested, just send me an email. My email is in the link of this description of this YouTube video. It's a great course. I teach you step by step by step. I've taught so many people around the world, but I'll mention it again at the end of the podcast. All right. But anyway, so far this particular trade has been a monster, and we nailed the low. I nailed the low on that one, and this particular trade up 9.73%. Not too shabby. All right. So this is on a daily trade. All right. Now I mentioned at the beginning of the podcast that I also trade weekly and monthlies. Well, all right, let's see. When did I buy this? Did I mention 527? So I bought this with a higher low V1 while MACD was positive. Bought this here at 93.03. I position size the way I showed you at the beginning, taking my maximum allowed loss, dividing it by the 2 ATR value on the weekly, because it's a weekly trade. Placed my emergency stop, as always. Placed my trailing stop level, orange line, and then my end of day stop. Well, my end of day stop is just, this is a V1. Again, this is something I teach in the lessons, but this is a V1. Here's day 1, day 2, day 2 went under day 1, closed back above. My stop on this would be a close below halfway of this wash-up hour on the bar that I took it at, 88.40. Well, next it moved up, came down, but never closed below here, and then up, and then up, and then up. So I did take partial profits 2 weeks ago when we rejected the 50 RSI. I think that was just roughly here about 15.87%. I took half profits. Well, we are now higher than that. So this particular trade from the balance up 20.88%. And of course, in addition to taking, I took half off here because that's my trailing stop rules, because we rejected the 50 RSI and then came down. But in addition to that, I also take profits on the way up with the 0.45 profit target. So end of the week. So next week, what am I going to do? Well, I'm not going to write this all out, but it's beginning of the week. So I'll set my profit targets. I'll take 117.60, add 724 to it. That will be my first profit target. Whatever that is, I'll add 724 to it again. That's my second profit target. Take the second profit target, add 724 to it again. That is my third. So I always like to play offense and defense with my trading. The trailing emergency stops, end of day stops, that is defense. Trailing stops, defense. Offense, what's offense? Well, offense is when I sell into strength and take a partial position off. So this has been a great trade on Alibaba, up 20.88%. All right, lastly, Home Depot. This is a monthly trade. This one's been down, but has recovered. I took this trade because I really wanted to show this on the podcast because it's such a great setup. This is called a return to value V1. Again, something I teach in my lessons, but this green line, anywhere in here is the value zone. I want to buy in value, sell above value. I want to buy below value, sell in value. What I don't want to do is buy above value, have it come all the way back, and me have to get out for my stop at value, because that's normally where I want to buy, right? So anyway, we had a nice move up. We had a pullback into the value zone. We had sideways motion showing that there are buyers available, and that's what stopped the move down. Then I have to have my trigger. Well, my trigger here was a V1, bar 1, bar 2. Bar 2 goes under bar 1, closes above bar 1's close. Got in at 307.41. My emergency stop is here, 2 ATRs below my entry. My trailing stop level is 1.5 ATRs above my entry. You can see we haven't got to there. We haven't got to there. Then I also have my end of day stop, or in this case, my end of month stop. Well, an end of month stop on a V1 or a V2 is a close below halfway the washout bar, 294. So right now we're at 283. So it's down, but it's not the end of the month. On the last day of the month, if it closes below halfway of this washout bar, I will get out of the trade. Or another possible scenario is if it gets to my emergency stop, I'm going to get out there and not wait for the end of the month, right? How much do I lose if I get to my emergency stop? Well, remember, whatever your emergency stop is, when you do the math using the 2 ATRs, it's going to be it'll be perfect, right? So if I said my maximum allowed loss was $1,000, if it gets down to my maximum, if it gets down to my emergency stop level, that's all I will lose. Even if, let's do the math here. That's 30.59% below. I've had people say, well, so you lost 30% of your account. No, because using the 2 ATRs does all the math for you. And I would still only lose that $1,000 or 1% of my account. So don't let the big percentages fool you, because dividing your maximum allowed loss by the 2 ATR, it's perfect. As long as you say, okay, 1,000 is my maximum loss, 2,000 is my maximum loss. It doesn't matter what percentage it gets down there. That's going to be your maximum allowed loss. All right. So this particular trade currently down 8.57%, but the trade is not over yet. So that's it as far as what I have at the moment. Pfizer up 9.73%. Alibaba up 20.88%. And then on the monthly, we have Home Depot down 8.57%. All right. So let's head on over, talk a little bit about trader psychology before we start looking at some trades that I'm interested in for this week. Really love this channel, everyone. Restarted Trader, money and financial freedom. We've all been there, right? The restarted trader. You're doing things you're not supposed to do, and you turn over a new leaf and start trading the way you're supposed to be. So not sure of this gentleman's name, but proud of you. And I really do like your Twitter posts, and please follow him at Restarted Trader over on Twitter. I believe this is Restarted Trader because it has the ... but just looking for Restarted Trader. Look for this gentleman right here. Please subscribe. It's a really good channel. Let's see what he has to say. Every trading strategy goes through a difficult period. It's true. Think before you toss it aside and look for a new one. So this is really important. As long as you have a good, structurally sound trading approach. And what does that mean, really? That means position sizing, emergency stops, end of day stops, position sizing for volatility. Very important. As long as you have that and your risk to reward's good, that's good fundamental trading. But it doesn't mean it's going to work all the time, right? Look at the last few months that we've had in this market. Pretty brutal, right? swing trades were very, very difficult. Really glad to have some positive day trades. Swing trades here. But that's kind of off the subject, but that's why I like to trade multiple time frames, right? Day trading has been really good. Swing trade's not so hot tamale, but lately swing trade's been pretty good, right? So if you have a good trading strategy, back test well, quantifiable, good risk to reward, all that kind of stuff that we talk about in getting a setup, the proper type of setup, doesn't mean it's going to work. But if it has a period where it doesn't work, don't just throw it aside and look for something new. You could just be throwing the baby out with the bathwater because, like he says, every trading strategy does go through a difficult period. Don't be so quick to abandon if it's just not working every second of every day, right? It's not going to. So every trading strategy goes through a difficult period. Think before you toss it aside and look for a new one. And I do see people do this. If one's not working, they look for one that works. And it's kind of like being in traffic. You're in those two slow lanes, and like the one lane's not working and the other one seems to be moving. And so you like get over into that lane, and what happens? You know exactly what happens. You get in, it's moving, it stops, and then the other lane that you were in that wasn't moving moves ahead, right? Pretty good analogy. That's really correct. But make sure it's a good trading approach, quantifiable, good risk to reward ratios. You have a plan, but if it's not working, don't be so quick to toss it aside because it probably will start to work. But again, it has to be a good quality, structurally sound trading approach from the beginning. So please follow Restarted Trader at Restarted Trader over on Twitter. And this is a really important post. Every trading strategy goes through a difficult period. Think before you toss it aside and look for a new one. Don't get into that two-lane traffic situation. If it's structurally sound, stick with it. I think you'll be happy that you did. All right, let's take a look at a poem from Frank, see what he has to say. Please follow my friend Frank over at FrancoD over on Twitter. He's a great trader. He's a great musician. He's a great poet, writer, and he write such pertinent information about each day's trading activity and what the market's doing, and they rhyme. Pretty impressive, right? Let's read it. Skyrocketing fuel prices truly pack a punch. Add in the cost of food and it eats your lunch. No one wants risk when problems come by the bunch. It's no secret why markets are in a crunch. It's true. There's a lot of things going on here. Interest rates, fuel prices, inflation, some earnings issues. Of course, we have the conflict with Russia and Ukraine. So there's a lot of things going on, and the market's been really beat up. Really, it has. But, are there more bad things to come? Possibly. You never know. You can't predict. All you can do is have that good structurally sound risk to reward ratio where you position size based upon volatility. That's it. Let's read it again. Skyrocketing fuel prices truly pack a punch. Yes, they certainly are affecting everything. Add in the cost of food and it eats your lunch. So food's very important. No one wants risk when problems come by the bunch. That's why the market's going down, right? People don't want to take on risk until they do, and then everyone piles in again. It's no secret why markets are in a crunch. Look, we've had a pretty good run on the bull side of things in the market, but this has been different. We are in a bear market for sure, and do be careful. A lot of these rallies, the biggest rallies you ever get are the ones that are in bear markets. So keep that in mind. So thank you very much, Frank. Appreciate that. Please follow Frank at FrancoD over on Twitter. All right, here we go. So I have 9 symbols to look at. Let's take a look at the, or I guess 10. Let's take a look at the markets in general. Let's look at the SPY on the daily. Well, okay, so listen, we did have the under over 30s that seemed to hold and seemed to work, but now we're coming right back into the value zone. This green line to this green line, anywhere here, but we came from under the value zone into the value zone. And from my experience, when you're under the value zone, you want to start selling when you get in the value zone. Yeah, of course you want it to go up the new highs. I doubt it's going to happen. I could be wrong. But when you're under the value zone, when you're under the -1 Keltner channel or the ATR channel, when you're under, once you get in, especially kind of halfway, and we're at this 20-day moving average, I would not be surprised that we have a little bit of a pullback. Now, could this just go down and straight up? It could, but it's unlikely. We have a couple gaps over to the left here. Here's one. Here's one. We've already filled this gap. We could potentially fill this gap here as well. But after that, I think what's going to happen, we're going to have a bit of a pullback. I could be wrong. Maybe we get to the 50. Maybe we go straight up. We get to the 50 EMA or the 50 SMA. But I would be careful buying the market just general right here. We've moved pretty far off of the lows. And we have moved, let's see, 7.67%. I mean, that's a pretty substantial move. So my guess, my experience is that yes, maybe we go a little higher the 1 ATR channel, maybe we fill this gap. But after that, I think we're going to have a hard time, and I think we're going to pull back. I mentioned earlier, one of my favorite setups is called a higher low V1 or V2. This is what I teach in my one-on-one course. But I see this over and over where we're below the 1 ATR channel, we rally into the value zone. The people that were lucky enough to buy down here, if it gets weak, they're going to sell to lock in profits. That's going to move the market back down. Then if we can get another group of buyers to come in, give us a higher low V1 or V2, that's usually when you can pick up a nice longer leg. But these lower lows that come off the 30s, when they get into the value zone, they tend to fail. So I just want to point that out, okay? Let's look at the Qs. Exactly the same thing. Held the 30 RSI, held the negative third ATR channel. Now we're back into the value zone. We filled this value gap. We filled this gap. We've yet to fill this gap completely, I believe. Yeah, we haven't. So we may, but again, the people that were lucky enough to buy down here, if it gets weak, we start getting, the momentum to the upside stops, or we get a close below the previous day's low. That will be their sell signal. That would be mine, right? I showed you over here on Pfizer, same thing. I mean, caught the bottom up high, but if I get a close below the previous day's low, I am getting out of half. And a lot of other traders will be thinking that way as well. So I don't mind the NASDAQ Qs go up a little bit higher, but my gut feeling is we're going to pull back after that. I could be wrong, but more times out of not, that's what happens. So, okay, so I have 8 symbols here that I'm looking at for next week. Let's take a look. All right, here's Caterpillar. Boy, Caterpillar really got crushed here. Look at this. Straight up, straight down. So we did go under 30, over 30 on Friday. That is a legitimate signal. I didn't take the signal, but what I'm looking for next week is another under. If we have a pullback, I'm looking for another under 30, over 30. I like higher low under 30s, over 30s. This one clearly came from a lower low, under 30, over 30. But I'd like to see this pull back, stay higher than this low, but test that 30 RSI again, and then go back over one of my favorite trades, higher low V1s, V2s. So Caterpillar, what I'm looking for next week is another under 30, over 30, and ideally a higher low one. Okay, next on board, Gossett Pharmaceuticals. Had a great trade on this Gossett Pharmaceuticals. They have developed a pharmaceutical drug for hair loss, where 40% of the people, it grows back all of their hair. Can you imagine? So I've been waiting for a good setup on this. This would have been a good setup here, a close under the 200, close over the 200. That would have been a fantastic trade. But I mentioned this next week. What I'm looking for a pullback and another retest of the 200. You have to be patient here. It could bounce from here. I mean, look, we were way high. We came down, but now there's some support. There are some buyers at this level that are supporting this price here. Now, we could get a 520 crossover. Don't know if that happens. I was not able to backtest 520 crossovers on Gossett, but really essentially what I'm looking for is either a bounce at the 200-day moving average, a close under, close over, a bounce or an intraday rejection, or possibly with this sideways motion here, one bar that comes down, looks like it's breaking to the downside, reverses back up with the V1 or a V2. I would also take that there. And again, I teach that in my lessons, V1s, V2s. In my YouTube channel, I do have a lessons playlist where I do teach some lessons there. Those ones are completely free, and I do have a video on V1s, V2s, and I think it would be worth your time to go check that out. So what I'm really looking for on concert for next week is a bounce of the 200-day moving average, or alternatively, because we have this sideways motion, look for a attempted move down that reverses back up with the V1 or V2. That would also be a good entry point for me as well. FCX, okay, very similar to Caterpillar. We did go under 30 over 30. This would have been a legitimate signal just by itself on Friday. Did not take this. I would have liked to have been at support or have a V1 or a V2, something to kind of help embolden the trade. Did not form a V2, almost did. Here's bar 1, 2, 3. 2 goes under 1, 3 did not close above bar 1's closed, so it's not a legitimate V1, but we're at 31.36. So if we have a little bit of a pullback at all and go under 30 over 30, it would be, like I just mentioned, a higher low under 30 over 30, which is what I'm looking for. So right now it's above 30, nothing to do, but if it goes under 30 over 30, that's where I'll be looking. All right, McDonald's. So McDonald's had a close under, close over the 200-day moving average. Is that legitimate to buy? Yeah, it is. I didn't buy it. I did not buy it. But what I'm looking for next week on McDonald's is another intraday, an intraday rejection of the 200 where it comes down, tests it, so then I know, and rejects it, closes back above. That would be a good signal because it would show that it double tested it. Or alternatively, if it closed below the 200, maybe for a couple days, and then came back up above the 200, then I would have a higher low close above. This is a close under, close over, but it came from a lower low. I would ideally like to see this move up, have a little bit of a pullback, and then close back up over the 200. That would give me a higher low V2. TLT. All right. Well, this is a good example of the SPY and the Qs of being well below the value zone. Again, the value zone is between this green line and this green line. Below the value zone. Once we rally into the value zone, it usually pulls back. See what happened? It's exactly what happened. Went below. People that were lucky enough to buy down here when it got here and then had a close below the previous day's low, they probably took some or all of their position off, and that's most likely why we had this move back down on Friday. Now, earlier I just talked about V1s, V2s. We could potentially have a V2 tomorrow or Monday or sometime this, actually it would have to be tomorrow. If tomorrow's bar, this is bar 1, Friday's bar is bar 2, if Monday's bar 3 closes above Thursday's close, we would have a V2. Bar 1, bar 2 washes out bar 1 or goes below bar 1. Bar 3 closes above bar 1's close. That would be a decent signal to take a look at for myself for entering TLT long. Where would be my stop? Well, Friday was the washout bar. So if it does trigger a V2 and then closes below here, that would be my stop. Where would be my emergency stop? Whatever the value of the 2 ATR is minus my entry. That would, based upon our hypothetical, would give me that $1,000 loss based upon a $100,000 account. Or if you're trading 50,000, it would be 1%. So don't know if this is going to happen, but this is what I'm looking for: higher low V2 tomorrow on TLT. If I don't get the trade, then I'll just have to look into another market for a different trade. So this is kind of a one-day only situation on Monday. VIX. Well, VIX has come back down. It's under the 200-day moving average. Look, we had a close back over the 200, but then it failed. Not surprised because it came from a lower low. Friday's bar did close below the 200. If we close above the 200 on Monday, that would be a higher low, close back above the 200. So if VIX does close above the 200 here, coming from a higher low perspective, a higher low close back above the 200, that's where I would get interested in VIX. XLE. All right, well, similar to Freeport and Caterpillar, same thing, commodity related, so not surprised that they're the same. But look at this huge move down. Look, on Thursday, we went under the 30. Friday, we closed above. So is that a legitimate trade? It is, but again, it's coming from a lower low without any combination or confluence of the signal. So next week, this coming week, on energy, if we go under 30, over 30, and it's a higher low V1 or V2, that's where I'll be interested. XLU, all right, so that's utilities. I don't talk a lot about shorting, but look, with this huge move down we had, and now we've rallied. If this coming week, if I get a rejection of the 200-day moving average, I will short this with my stop being a close, any close back above. I want to see it reject the 200 first. Position size using 2 ATRs, I place my emergency stop above. My end of day stop would be a close above the 200, just the opposite of longs. I would place my 1.5 ATR trailing stop level 1.5 below because it is a short position, but I want to see it reject that 200-day moving average before I do anything. And right now it has not tested it. So if it does test it, closes below, not too far below. If it's too far below, then the risk to reward ratio is skewed. Then I wouldn't take it. But if we have a nice little gentle rejection of the 200 and close back below, I will go short XLU. All right. So anyway, I hope this was helpful, everyone. Like I said, I do teach private one-on-one lessons in the evening time via Skype. I think the best way to learn anything, whether it's trading or violin or tennis or whatever, is to work one-on-one with a mentor or a coach. And I have been teaching private one-on-one lessons for years. Like I said, it's the best way to learn. If you're interested, I teach you all 5 of the different trading approaches I use. I'm very patient. I teach you step by step. We go over everything, and I know you're going to be a better trader. I've taught so many people from around the world. They're all glad they took the course. It does cost $1,750, but it's worth every penny. So if you're interested, just send me an email. The email is in the link of this YouTube video. And if you do reach out to me, I'll reply, say, hey, thanks for saying hi. Let's set up a Skype call. The Skype call is free. It is not a sales call, everyone. It's not a sales call. I just want to learn more about you, your trading, your challenges, your goals. And it's a good time for you to ask me any particular questions about the course in general. And when we're done with the call, that's it. You won't hear from me again. You'll have to reach out to me and say, hey, you know what, Greg, thanks for the Skype call. And yeah, I do want to take the course, and then we'll schedule it, and it's going to be great. I'll teach you everything, and I know you're going to be happy you did it. Number 2, I also have an online video course available at udemy.com. The link is in the description of this YouTube video. It's a great course. I teach you the step-by-step, the deep dip buy stock trading strategy, and it's so helpful. If you're starting, take the course. It's $12 or $15, depending on the day, for Udemy, and I teach you everything about the deep dip buy. It's a great course. Don't let the low price fool you. There's 9.5 hours total video. There are 15 study guides. There's 26 videos. I've got so many good reviews from around the world, and it's a wonderful course. So if you're interested, take it. It's $12. I promise it's going to improve your trading, and the link's in the description of this YouTube video. Lastly, if you like today's podcast, I really would appreciate it if you could hit the thumbs up button. It just helps YouTube. It lets YouTube know that there's some valuable content here, and hopefully this is helpful for you to kind of see my swing trades, what I'm thinking, how to place the emergency stops, all the things we've been talking about tonight. So all I ask is if you could hit the thumbs up button. It really does make a difference, and it helps. So I would appreciate that. If you share it on social media, something like that, I would also appreciate that as well. So I hope you have a good trading week next week. I hope you follow your rules. I hope you keep positive. I hope you get out, do some exercise, do some meditation, do some presence work, eat some healthy foods, maybe do a little chart study. Always helpful as well. But I think most importantly, try to go out and do one nice thing for someone today. Just one nice, just one nice effort, just one random act of kindness really would make the world a better place. And you know me, if you've been watching this YouTube channel for a while, I really love animals. I was raised by them, raised with them, and kind of by them actually also. But they appreciate acts of kindness as well. And, you know, I think if you were to do that, one nice thing for a human every day, one nice thing for an animal day, I think you will be paid back tenfold because one day you may need it, and just kind of the karmic energy of it all. You build up some good karma, and I think one day you'll be glad that you did. So it's something I try to do. Even if I don't get anything back from it, it's a good thing to do. All right. So if you have any questions, or comments, please leave them below in the comments section. I'll do my best to get back to you on those. But anyway, thanks so much for coming. On the way out, I have to run the U.S. legal disclaimer, and have a great upcoming week. All right, everyone. I'll talk to you soon. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.